FedEx announced on Monday that they'll be increasing shipping rates starting in the new year. The rate increases are set to take effect on January 3rd in 2022, and they'll apply to all U.S. domestic export and import services. FedEx ground and home delivery should expect to see an increase by an average of 5.9%, and freight customers could see an increase of up to 7.9%. But that's not all, because FedEx also announced that they are adding a fuel surcharge to certain shipments beginning November 1st. So it looks like online shoppers could feel these rate increases even before the holidays. Join me now, co-founder and chief strategist at GDP Advisors, Seth Denson. Seth, thank you so much for joining me. Seth, that's a steep increase, 5.9% and a 7.9%. These are big numbers. Do you think this is going to change how people shop?
Well, it absolutely will change how people shop. But again, for those of us that get items shipped, you got to understand that it's not long probably before we see UPS and possibly even the United States Postal Service following suit. They all tend to follow one another in this area. And this is just, listen, this is the reality of inflation. If we're sitting here looking at inflation at 5-6%, and it's kind of hovering between those two on a regular basis, these companies will start to move that around. I've said it before. I'll say it again. Margins don't get squeezed, they get moved, and they ultimately get moved to the consumer.
Yeah, no, you're so right about that. And it might, I agree with you. I think it might change the way people shop. That is a huge increase, and you're right. I think it's gonna hit a lot of other ways that we are delivered our goods. So we'll keep an eye on that. And that's
why they say Stephanie, it's why they say that inflation is a hidden tax, because at the end of the day, that's effectively the consumer. It's the end user that's paying it.
Yeah, definitely. Now I saw this. Apparently, according to a study, Americans went overboard on spending this summer. Do you think people regret spending more than they should have? And what inspired the spending? Was it because of COVID-19 and people are stuck at home, and so just shopping seemed a little more alluring than usual?
Yeah, I think you got a lot of factors playing out, right? First and foremost is you had a lot of people who last summer, quite frankly, couldn't spend money because there was no place to spend it except maybe Amazon, right? So, people were eager to get out. We saw good increases in the travel sector specifically. Obviously, that industry is up. But there's an old adage that money will burn a hole in a pocket. And I think that people do have cash right now. Savings is at an all-time high. They're getting money from the federal government. They got a lot of pent-up demand because, quite frankly, they've been sitting at home. They're eager to get out. And so that's why we're seeing it 4 to 7% higher than pre-pandemic levels. I do think that comes down. But to the first part of your question, Stephanie, I'm sure there's some buyer's remorse out there.
For sure. Now, this one, too, another poll is showing that people are fed up with housing costs. I agree with that. I mean, we've talked about the increases in the housing market just over the past 2 years. It's just been a significant increase in most areas in the country. That being said, I mean, what can they do about it? It's just like an ongoing problem that doesn't get better, and it makes it almost impossible for young people to achieve the American dream when they can't even afford to buy a house.
Yeah, you hit the nail on the head right there, Stephanie, which is it really is those first-time home buyers that are the most squeezed by this. And that's for a couple of reasons, especially when you consider the fact that right now mortgages are very attainable. Interest rates are low. It's a good time to do that. But the problem is those first-time home buyers are losing out to cash. Why? Because of investors. When you have massive liquidity in the market, you have a lot of people, specifically high net worth people, private equity organizations, sitting on cash, and quite frankly, they're not going to earn it in the bank. They're going to put it to use. And with the stock market volatility and concerns, a lot of them are pulling it out and they're investing it in real estate. So what we're having is this heavy cash price market in real estate that is preventing first-time home buyers from getting houses in lieu of investors getting houses. And that's really a challenge. And until we get really interest rates up, which is a two-edged sword, and we get supply on houses back up, we're going to have a problem.
Yeah. And part of me thinks it's like things don't get done about this because a lot of the people who are making pile of money, if you will, and for those, the young people trying to get their first home, I mean, it's just, they can't. I mean, these prices are insane. I was looking at a place in Wyoming. It was like a cabin, and back in 2016, it was selling for around like $250,000. Today, it's selling for over $1 million. That is, and it's the same thing. No updates, nothing exciting. So it just goes to show how wild these numbers are, and whether or not it's even a good investment.
Well, that's right. The old adage, right? He who has the gold makes the rule. That is the golden rule. And I think, unfortunately, that is seeing itself played out here in the real estate market right now. You mentioned Wyoming. We're here in Texas. My wife and I have been eyeballing this tiny little cabin up on the Oklahoma border for a long time. It's now double the price it was a year and a half ago. And so, yeah, we're holding off. But it's really tough for those first-time home buyers because what they're now doing, now they're forced to continue to rent, which means they're not building equity anything. They're subservient to the landlord. And it's an unfortunate aspect of what we've got right now, which is this massive liquidity that's got to get under control.
Yeah, I remember reading a ridiculous article just a few months ago that was saying that like young people love just being permanent renters, but do they? Like, they didn't interview me. I don't want to be a permanent renter. So again, there's like a push to keep young people as renters, obviously, in this country, and it's pretty disturbing. Well, Seth, we're going to leave it here. Thank you so much.
Thanks, Steph.
Of course. Coming up.